Hi, I'm Dave,
And I'm Paul.
and we're going to challenge you to transform your financial future through the principles of the most profitable business in the world, banking.
We believe everyone should be involved in two businesses, the business that you're in and the banking business. Everyday people can replicate what bankers have been doing for centuries to leverage capital and build wealth through private lending.
Join us as we uncover the truths about money, expose lies and myths, and flip conventional financial advice on its head. Here we go. All right, Paul, what's going on, man?
I'm recently returned from Tennessee again.
I see you're wearing your Tennessee quarter zip.
I am.
Yeah.
Yep. Spent the weekend or Friday, Saturday, and came back Sunday. Spent 14 hours on Saturday picking out everything for the house.
14 hours.
14 hours straight. And we ate out. We had Five Guys for lunch. Awesome. And then we had McAllister's Deli for dinner.
And were you drinking while you were picking all this stuff out?
A little bit.
Okay.
Yeah.
So
I
we'll
had a
see how
couple
it
of
turns out
Yinglings
when it's
during
put all
the
together.
day.
Yeah.
Oh yeah, it's gonna look awesome.
Yeah, you were just showing me the picture of the pool. That looks amazing. I can't wait for you to fly all of your clients and your business partner down for the house opening. So just remember that Paul's flying you all down for the housewarming if you're a client.
Something like that.
Yeah. Yeah. Well, that's awesome, man. Yeah. So you were out of town. I was out. I just got back from Texas. I was there for the weekend for a real estate investor, like a multifamily conference. Not even specifically for the real estate portion of it. I had a buddy down there who wanted me to meet a lot of his network because these people need infinite banking. They just don't realize it. So
Yeah.
I took some copies of the book that I put together, like a little handbook that I self-published on Amazon called Infinite Banking for Real Estate Investors. Handed some of those out, had a lot of conversations about it, and I expect to have several meetings going forward about it because it's a great fit for syndicators and anybody trying to save and accumulate capital in order to then invest in whatever they want, in syndication in this example.
Sure.
So it was pretty fun, man. You know who I met while I was there? And I actually had dinner with him and spent a couple hours just in conversation with the guy. You don't play video games, just like I don't play video games, right? But Call of Duty.
I play a little bit. But
Have
not
you
really.
played any Call of Duty?
Yeah, I like Call of Duty. I don't.
You know the
I
general,
haven't played it in forever, but
General Shepard in Call of Duty.
oh gosh, I don't know it that well. Is
Yeah,
he one of the
I mean-
characters you can be or whatever?
Well, I don't know, one of the main characters. It might be one of the new versions of Call of Duty. I don't play it, so I didn't know. I recognized him from other movies and TV shows I watched, but it was General Shepard from Call of Duty and Glenn Morshower. He played. Did you watch 24? The first
I
few
did.
seasons, he was Aaron, the Secret Service agent.
Oh,
Yeah.
yeah.
Yeah, dude, it's so interesting, man. I mean, just the conversations, really deep, really introspective, and asked really good questions. And just a fun guy. He teaches acting now, and he teaches people, probably business professionals who want to present on stage and just have more confidence and better public
Very
speaking. But
cool.
he was fascinating. It was a lot of fun. I met some of his friends, and yeah, we had a good time. But yeah, great time. Good to be home. I do not like being away from home, really, anymore.
Well, that's good. That's a good thing.
Yeah, it is. It's nice being at home. Kind of a homebody these days. But, well, all right, man. Cool. So we had a question come in. You wanted to review that real quick?
Oh yeah, I was just looking up Aaron Pierce. Yeah, I know. He's either a guy that plays like a government official, Secret Service or something.
you're right.
Or he's like he was in Air Force One and he gets killed because I mean every Secret Service agent in that movie at the beginning of the plane they get
Yeah.
killed, right? You know, automatic fire in the middle of an airplane. You know,
Yeah, he's either...
nothing
you're-
decompresses. You know,
You're
nothing
right.
hits a window
Yeah.
or goes through.
Yeah, it makes sense. No, he's right. He said him more than any other actor, past or present, has appeared on film in uniform more than anybody else in history.
Yeah, he's in
And
Transformers.
Yeah, he's always in uniform.
Yep.
And I told him he was in Black Hawk Down, and he
Yep,
played
he played one of the guys in the
Colonel
helicopter.
Tom,
That was
one of those guys. And
Yeah.
he said that colonel, the real life guy, was usually within 5 yards of him, and he made sure. And I told him I really appreciated this. When he does military movies, he wants to get it right because we watch military movies and they're a joke,
Yeah.
right? Their clothes, the way they wear their uniform, the way they salute, the way they talk to one another, it's a joke.
Yeah.
But he's very intent on getting it right, so I appreciated that. I thought it was really cool.
Yeah, that's good. Yeah, Black Hawk Down was one of the ones that got it right.
They got it right. Yeah.
Yeah.
Yeah. All right, man. Well, cool. Moving on. So what is that question? Do you have it pulled up?
I do. We have a question that came in today, actually, from Will C. And Will writes, "Hello. I am wondering if you guys could cover the following topic on your show. My financial advisor has funded me into an accelerator IUL policy for the last 5 years, and it's accelerated with an like XCL.
Sounds fancy.
Erator.
Sounds
so that
awesome.
must be just sounds amazing. Get me one
incredible.
of those. And let's see. So for the last 5 years. And then he says, I got into IBC against his approval, surprise, in this past year by researching Nelson's work on my own. I funded my own IBC policy. We'll talk about that this year. And I am now capped on death benefit between the two. I have come to learn from Nelson how inefficient IUL policies are. I am now strongly considering surrendering the whole IUL policy to transfer the premium funds of the last 5 years. I'm assuming he means the cash accounts value is
Right.
what I'm assuming.
The
he
cash
means.
accounts
And then
value. Right.
redirect premium to whole life.
Yeah.
Into new dividend paying whole life policies. Could you give advice on that? And what process would you go about doing so if in my shoes? Also, I love the show. Been listening since this summer. Thank you for considering Will. Will, first of all, thanks for listening. That's a great question. And he's got some options, doesn't he, Dave?
Yeah. Yeah. And this could be a full episode, or maybe it will be. But big picture, what Will got into an IUL, he's got a little buyer's remorse now 5 years later after learning about infinite banking concept and the reasons why Nelson and IBC practitioners promote whole life versus IUL. And now he's wondering, do I have any options with this? And yeah, the answer is yes. I don't know your specific policy. I don't know anything about it. So we're just speaking generalities here, but you have some options of surrendering it. There's going to be some surrender charges because there usually is in the first 10 years of those policies. Or you could potentially do a 1035 exchange, which is just moving that cash value from one policy into a like asset, which would be a whole life insurance policy. So there's that. It's kind of, you're going to lose something, right? Because you probably haven't hit the break-even point, not even close yet. So
not with that thing.
Yeah, but I tend to look at that more as a sunk cost, man. I either take the loss now or I take the loss later on after I've paid in for 20 or 30 years.
Yeah. The longer, Will, that you let it go, the worse the pending disaster will ultimately be.
Kind of like the national debt.
Right. It's much worse than the national debt. So, yes, I think you're in the right mindset. You've now gained some clarity by acquiring knowledge. And, for the folks watching on YouTube, I'm going to hold up Building Your Warehouse of Wealth, Nelson's second book. In chapter 9 on page 73, he says, my thoughts on universal life, variable life, and equity index universal life, now just called index universal life. So it's not appropriate for IBC. Will, you already, you know that now. But yeah, you definitely have options. So maybe we do a more in-depth episode on that, Dave, down the road. But yeah, IULs, any type of universal life is not an appropriate product for implementing IBC.
Correct. And I have to look back at that episode. We'll tag it in the show notes, but we did a complete episode on IUL versus whole life for the purposes of IBC. And I believe that was pretty early on, but we'll find it for you and throw it in the show notes.
Yeah, right on. Yeah, that's a good question.
Yeah. All right. Cool. Well, so something else we wanted to talk about. Okay. That was episode 29. Universal life versus whole life for the purposes of IBC. Episode 29. There you go. All right. Transitioning. So today we realized one of the biggest questions we always have with new prospects is, hey, how much should I be paying in premium? And thankfully it's that much with most people because they come in with some education, as opposed to people who come in with no education say, how much do I have to pay in premium? At least we moved on to that next level of how much should I be paying in premium? Ultimately, we want to get to what? We want to get them to ask what question?
How much can I pay?
How much can I pay? So it's an evolution.
Right.
Yeah. So that's a common question. And I realized after going back through 93 episodes now, we don't have one episode solely dedicated to how much should I pay in premium. So let's just make this a whole episode dedicated to that and knock this question out. So we always have something to refer people back to and listen to this a couple times if you're trying to decide how much to pay in premium. And then you got to think on it. So I'll let you start it off. We've got, lots to say about this, but go ahead and tell me where you would start, Paul.
Yeah, I'm looking at our notes. Something to think about, and I'm going to start before we go to our first bullet here, is how much can you pay can be restricted by an underwriter,
right?
Who's evaluating your human life value and your ability to pay premium. So now, if you're making a certain level of income, and that number is generally 15%, isn't it, Dave? That's kind of like their starting percentage of income, where an underwriter will be like, okay, that's the most.
I'd say that's if you make the average American salary. But I think most people we work with make plenty more than that.
They do. And some of you listening know that you're probably paying at least 15%, if not more, of your annual salary as premium. So, but generally speaking, that's what they're going to look at, 15%. And then again, depending on your income, we can adjust from there. But fundamentally, how much premium you're going to pay is, it depends. You're just going to start where you're at. If your salary this year is at a certain level and has been over the last few years, your cash flows better than anybody. You know what is going to a savings account or what is going to an investment account or wherever it's going. You know what's left over after all of your obligations have been met. So based on that, that's kind of probably the starting point of our discussion of what the premium is going to be.
Yeah, but that's just the starting point, because as you get more into it, and Paul and I look at your cash flow situation and where money is leaving your hands, a lot of times we'll have conversations with people and they'll discover through their own conversation or listening to other podcast episodes like, oh man, actually, I'm sending money over there every month when really I should send it here first. And then I can use it later when I need to, and send it over there. Because then at that point, you've captured that permanently inside this asset. So it'll be compounding uninterrupted for you until the day you graduate. Right. So
that's right.
You can always find, typically, if you have more eyes looking at it with you, especially with experience from an IBC practitioner, you can find money. Right.
Yeah. Yeah, no doubt. I always tell people when they enter the process, the more honest you are about your finances with me, the more I can help.
True.
The more I can see. And I'll see, and again, like you said, we'll see things that you just don't see.
Yeah. Because if you just stopped where you initially said, hey, look at what's left over at the end of the month, your disposable income, if you will, or discretionary income, then you're probably going to make the number one mistake or have the biggest regret that the majority of people who start their first policy have, which is you went too small.
Yep.
Yeah. And then all of a sudden you're like, I should have gone bigger. And then you come back for a second policy, which is great. this shouldn't be just one policy. It
Right.
should be a series of policies. Like currently I have like 11 policies, and I'm sure next year I'll be adding at least one more for myself, maybe two. So, I mean, why
Right.
not?
That's right. Yeah, that's very common, right? People, they're not at the how much can I pay level yet. And that's rare. I'll always point out to people that, and I've had a couple in the several hundred, right, that have been like, I want to pay more, and that's great. But
Yeah.
sometimes you have to kind of like, all right, just slow your roll, man. Like,
Pump the brakes.
pump the brakes.
Yeah.
That's good, but so anyway, yeah, but it's going to happen. Natural expansion.
Yeah. And you can actually pay, depending on your income, up to upwards of 30% of your income that can get past the underwriters. If you want to pay more than that, that can happen too. You just have to, there's some certainly legal and ethical ways of sidestepping that underwriting requirement.
Yeah, and it's not a
know.
hard requirement, right?
There's always exceptions that
no
they'll make.
Yeah, no doubt.
Yeah.
Some people might be cash heavy, so an underwriter sees like the first year annual outlay of premium, and it's an extremely high number, beyond 30% of someone's income. And of course, we have to answer the question quite simply, but they have to ask it, and that's fine. Like, no, this person has existing liquidity. Here's their financial statement. They have, this much money sitting in a savings account or a CD or
brokerage account,
brokerage
or
account,
that
or
they're
whatever.
going to pull from every year. Yeah,
that's right. So, as long as it can be explained away and it makes sense, and it makes sense to us and makes sense to you, it's generally not a problem.
Yep, absolutely. So I've always said, and I can't even remember who I got this from, or if it was a combination of several mentors, like your premium should fit two requirements: manageable and meaningful. So what does manageable mean to you, Paul?
So if I had to define that, I would say that's something I know I can handle every month, every year, for the foreseeable future, or in perpetuity. Like, I know I can do it. So if it's, $10,000 a year, yep, I know I can absolutely do that every single year for the rest of my life. That would be, that's probably manageable to me, I think.
Right. Barring any, like, what do they call it? Force majeure, like act of God that just completely,
right,
destroys whatever situation you thought you were going to have. Not that would really be an act of God, but that's what they call it.
Right.
Yeah, exactly. So it shouldn't cause you any stress whatsoever.
Yep.
That manageable number.
That's right.
Now, $500 a month. People are like, oh, I could do $500 a month. I'm like, okay, cool. That's manageable, I'm sure. But is it meaningful? Is it meaningful to fund $6,000 a year in a premium? Well, it depends. It depends on where you're at right now. Maybe for somebody making $30,000 a year, yeah, that's meaningful.
Yes.
But
right.
for somebody making $150,000 a year, no, you're not. That's not meaningful. Like,
that's correct.
What's it going to do for you? What are you trying to? Are you really trying to replace your banking system, or are you just trying to like dip your toe in and have a little slice of your portfolio be permanent life insurance and guaranteed cash value?
Yeah, and that's where the level of understanding of IBC comes in, knowing the entire problem set, which most people will maybe grasp some of the problem. Well, I'm bleeding interest to other people's banks for my entire lifetime. Okay. But they don't take that next step and think, well, how do I address, what is the best way for me to address that? Well, it's premium, meaningful premium.
Right. Meaningful. So also, to me, meaningful, like we said, manageable is like, oh, I'm comfortable. Yeah. It doesn't make me, I don't break any sweat with that number, right? I'm not going to lose any sleep. Meaningful, on the other hand, should be a challenging number that makes you slightly uneasy. That's the only way I can explain it. Like, if you want to relate it, like get your nervous system working for you. Think of a number and your nervous system reacts and goes, ooh, you pucker a little bit.
Right.
But not too much. Just a little bit.
Yeah, just a little bit.
Yeah.
It's not quite sweaty wads of dripping wet cash, but close.
Yeah. Yeah. So it should make you slightly uncomfortable because, and why is that okay? Like, I think for one reason, that's where you should think, because then you're ensuring that you're not going to go too small. You're not going to create something that's so insignificant that really you may not even see the point. If you're doing, like I said, 6,000 a year, but you make 150,000 at the end of a couple of years, you're going to be like, oh, well, shoot, I don't have very much. Like, yeah, I've got some cash value, but what am I going to do with that? Nothing I want to do. Like, it's not meaningful.
Maybe finance a vacation maybe or something.
Maybe, right? Take the kids to Disneyland.
Yeah.
So, but if you use that number that makes you slightly uncomfortable, you know that right there is a good test for, okay, that's a meaningful number, and it's going to do something sizable for me in the future. I'm going to have access to a large pool of capital for emergencies and for opportunities. And then it's time, once you get that going. Have you ever had a client stop paying a premium because they just couldn't make the payment anymore? They just let the policy go?
Yeah.
You have?
Yeah, just once.
But once, one client out of a couple hundred almost.
Yeah.
Yeah. So I've never had a client do that. Like, they've always made the premium. I've had one client get very close to letting it go. And luckily he reached out to me and he's like, I don't know if I can make this happen. And we talked about it and we created a plan. But if you understand that, but that's where the education comes in, because our clients understand what they're getting into in the first place. And they see the long game. They see the importance of making that payment. And hey, even if you have to drop down to the minimum payment, which is oftentimes going to be less than half of your total premium, you can do that. Just keep the policy going, and then you rebound and you start funding it fully, when things turn around for you, because we're all going to have those years in life when maybe things get lean for a year or two.
Yeah. It's unfortunate because especially if, our clients see the value, and the discussion occurs, hey, there's got to be, if there's nothing else that can be cut, okay, but there's got to be.
Yeah.
There has to be.
Let me see your credit card statement. Like,
yeah,
are you brave enough to show me that?
So I was talking to somebody last week, and it just came up, like, it was talking about the government furlough, and that's upcoming again. That stopgap measures expiring. But anyway, some folks are like, they get worried. And I was like, well, you're going to, these are civilian employees. You're going to get paid. It's like a paid vacation, but it's, paid once later. The budget is passed or whatever.
They're always going to back pay you.
Yeah. And they get the back pay, right? So it really is like a paid vacation, but what they're worried about is that gap. Yeah. And this particular person, I go outside, I'm walking out of the building, and there's his, $50,000 BMW.
Mm-hmm.
And I was like, life's not that bad. I mean,
yeah.
Just where's your money going?
Yep. Parkinson's law. So obviously he has not conquered Parkinson's law, where expenses rise to meet your income. If you can conquer that, you're going to be ahead of your peers. That's right.
And I'm willing to bet if I did the basic calculation of age times income divided by 10, his net worth would be way lower than that.
Okay.
Because I know how much he makes.
So take that. Talk through that equation, because that's probably new to a lot of people.
Yeah. So years ago, I read this book, The Millionaire Next Door. It's somewhere up there. Maybe it's down on this shelf. But they had what did they call it? They called it a PAW, like something acquirer of wealth. I don't know, I can't remember the word they used. But anyway, it was somebody that had done okay. And the calculation was basically, hey, right now, sit there, take your age, what's your income, and divide that by 10. And that should be your bottom line net worth currently. Assets minus liabilities, right?
Okay.
Yeah.
Interesting.
And if you're exceeding that, great. I mean, but that should be your baseline. If it's not, we need to kind of look in the mirror, like, what have we been doing? And I guess if you're 21 years old, okay, that probably doesn't make any sense. But once you hit your 30s and 40s and beyond, it's certainly a relevant calculation to just kind of see where you're at.
Okay. Yeah. That's good. So now you got something to shoot for,
Yes,
right? Not
absolutely.
that net worth is the end all be all. I think cash flow is more important than net worth,
Yes.
but without, yeah, but your net worth should be rising every year. If it's
Yes.
not, you're probably spending more than you're taking in.
Yep, that's right. And I've told my kids, we're getting a little off topic, but just due to inflation, you're gonna have to save 25% of your income starting as soon as you start laboring for a wage. You need
Yeah.
to save
And
25
save it
cents.
before you start investing it for cash flow.
That's right.
Like you gotta have,
Capitalize.
yeah, you gotta capitalize first. And then, yeah, now we're getting off topic. So let's get back
Yeah.
on topic, but those are all good things.
Yeah.
So here's something to realize. So I think we talked manageable and meaningful and how that should feel for both of those. And then we designed the policy to fit in between that, right? So you have a floor and a ceiling, and we'll
Yeah.
design it based around those two numbers to fit your situation. That's the way it should be done. I'm never going to allow anybody to do more than what I would actually recommend. Like I think you're capable of doing this based on everything I know about your financial situation. So here's I recommend 60,000 a year. And they're like, nope, I want to do 90. I'm like, I can't really recommend that for you. Like, I love the aggressiveness and the ambition, but let's do this one because guess what? This doesn't have to be your last policy. In
Yeah.
fact, in your mind, you should say, I'm not getting a policy, I'm getting my first policy.
I love that.
Yeah.
Yeah. That it's weird to people to hear us say that in some cases. Not necessarily our clients or our listeners, but just like why do you like that question comes up a lot with new folks. Like, why do you own so many policies? And you have to kind of go through why. Uh as my income rises and I need a place to put that income, well, it's a natural expansion of my system, right?
Right.
And Nelson says that. He teaches, if we've read the book, he tells us that this is to be a system of policies.
But I love that you said a natural expansion of my system, not an artificial expansion through premium
Laddering.
financed and laddering and all this other BS. Like natural expansion. Do it.
Go
Grow
get a HELOC.
responsibly. Yeah, go get get a HELOC, dump it all in a policy, and yeah, like natural. Like just like a business. If your business scales too quickly, you're probably going to fail because you can't keep up with demand, and then demand stops because you can't keep up with demand. So natural expansion is very key.
Yes. And I heard Ryan and James, I listened to one of their episodes today, and it was just kind of you have to have that premium, right, as a dedicated cash flow. And it needs to be from whatever you're into. If it's your business income, great. If it's your W-2 income, great. If it's 1099 income, great. But it's something that you can rely on, that you're comfortable with, that is it's going to be there year after year after year after year. But it's a dedicated cash flow. So hopefully that answers some questions. We don't do laddering. We don't do premium finance. That's not what we're into. It has to be a very specific case. I would say that.
Yeah. Okay, so let's move on to the next evolution of the question. Okay, now I have my premium decided. Who do I insure first?
Oh,
Like
gosh.
I've got a wife and 7 kids. Who do I insure?
Yeah, because the question comes up, hey, my wife's healthier. Should I get the policy on her first? And I was like, well, no. So the answer is, and I think we agree on this, Dave, is the primary main breadwinner. That is
Correct.
the first person to be underwritten. And that's where the bulk of the premium should be paid.
It's kind of like you own 2 cars. One's a BMW, one's a Toyota Corolla. Same year. Which one do you want more insurance coverage on?
Right.
The one that's going to be a bigger financial impact if something happens to it.
Yep. You want the right amount of insurance on those 2 items.
The correct amount. Yeah.
Yes.
And you can't be overinsured. You can certainly be underinsured. So perfect. Yeah. So breadwinner, and that makes common sense. I think that tracks with most people. That the person who makes the most money for the family should be the first to be insured if you can't do both at the same time, and should have more insurance than anybody in the family. And in fact, they probably have to have more insurance than anybody in the family.
Yeah, no. Oh yeah, no doubt.
Yeah.
Because again, underwriting guidelines, right, Dave? There's a limited amount that a non-working spouse can actually have.
Right. Yep. So after the breadwinner, we go to the spouse, either the non-working spouse, maybe stay at home, or they just don't make as much money. Right. So because there's still, even if, say, in my situation, I work, my wife doesn't outside the home, she's managing the household. Okay, she may not be pulling in an active income, but imagine how much it's going to cost me financially, not to mention emotionally, if God forbid she graduates unexpectedly, right? That's a huge financial burden on top of
Yes.
a huge emotional burden.
Yes.
So you
It.
need that spouse needs life insurance.
Yep. How many times have we had that conversation, Dave, with clients? Yeah, absolutely. And and if there's not enough cash flow, folks, to we want as much whole life premium paid in whole life death benefit because it's permanent death benefit. However, we want that spouse at least, maybe we do a 20-year convertible term as a gap measure to get us over that hump until our income rises, we can pay more premium. But yeah, certainly just because there's a non-working spouse, they have tremendous value, obviously, for those reasons that you just stated. Just, daycare costs and transportation, all the things that occur.
Yeah.
Forget the emotional stuff. I mean, that's, it's, yes, your time just increased dramatically, dedicating time to those things that, I mean,
Right.
Dave can't cook, folks. He can boil water maybe, but
Man, I learned how to cook a little bit. I grill. You give me the grill, I'm good. I'll do any of
you
that.
could sous vide.
Hannah does everything else. I can sous vide like a champ.
There you go.
Put it in the water, 125 degrees, 1 hour, done.
Medium rare, huh? Yummy.
Yeah.
Yeah,
So,
buddy.
yeah. So I totally agree. And the convertible term. So I'm working with a really smart couple right now. The husband's a pilot. The wife has a job right now that she's planning, I think, on vacating when she has another kid, because then the cost of childcare for multiple kids versus work, it just doesn't make any financial sense, right? You might as well just stay home and take care of the kids yourself.
Yep.
So she's going to get a convertible term policy because we're going to go big on his. And then when means increase, as he gets older, he becomes a captain or, switches airframes or something like that, or just time, he makes more money. Now we'll convert her term insurance over to a whole life policy. But at least now she's covered and she's locked in her health for the next 20 years.
Yep.
That we can. So if you want to learn more about that convertible term, go to episode 18. That's a full episode on how powerful and how valuable convertible term insurance is. So we don't downplay term insurance.
No, not at all. It has its use, right? And
Yeah.
Dave and I are in the process of opening convertible term policies on ourselves. We own several, but I just like to have it in my kit bag, just ready to go at a moment's notice, because the conversion is quick into a new whole life policy. Don't worry about the mechanics, folks. It's quite simple.
Yeah, well, we take care of that for you.
Yep, very simple process.
Yeah. So, all right. Any other final notes on this topic here before we call it a day?
No, I don't. I don't think so. Again, keep it. This is what I often say to people is this is super simple. Don't try to overcomplicate it, and don't set your premium so that it's manageable and meaningful. And in other words, start where you're at.
Start where you're at, manageable and meaningful. If you cover those bases, it should be pretty easy to come up with a number and do it right from the beginning.
Yeah.
I'll just leave everybody with this. We're coming up on, this is episode 93. We're coming up pretty close to 100 episodes. So 100 straight weeks of doing this without missing a beat. We're trying to figure out what we should do for the 100th episode. So if anybody has any ideas or recommendations or knows of any guests that maybe we could bring on, I mean, we've only had one guest so far. And actually, I'd like some feedback on that. Did you guys like the guests? Do you like having guests? Should we bring that in every so often, just to get another perspective? point of view. But if you have any ideas, please send us an email, throw it our way, send us a text message if you have our number. Because yeah, we want to plan something. That'll be cool. Maybe we could do it in person.
Maybe another guy named Paul.
Maybe another guy named Paul. Yeah. So I met a new Paul this weekend who maybe we'll talk about on the next episode, but I think we may have him on a future episode. Really cool stuff.
Yeah, for sure.
We like Pauls around here apparently.
Yeah. Small but wise name. That's what it means.
Small but wise.
Mm-hmm.
Yeah, that's what it means. Seriously, small but wise.
Yep.
Interesting. Yeah. I mean, you're not small, dude. You're average.
I'm right. I'm like, so yeah, I weighed in. So I'm 5'9", right? 162. I mean, that is as average as one can get. So
that's probably the correct BMI.
It's probably 21 or something or whatever.
Yeah.
Underwriter's dream.
An underwriter's dream, except that cholesterol you got.
Yeah, I'm pretty sure the whole cholesterol thing is a scam.
Yeah.
But that's what they go by. So I have to take pills. Otherwise my cholesterol is like 300.
Yeah. That's
still get approved with it, but it's, I'll get standard instead of.
Yeah. You heard it here first. You can have high cholesterol and still get approved.
Yeah. Yeah, no doubt. Yep.
All right, man. Well, have a good week, everybody. We'll talk to you next week. And until then, control your capital.
Or somebody else will.
Hey, thanks for listening, everybody. If you'd like to have a conversation with us to see how you can become your own banker, or if you have any questions or topics you'd like us to tackle on a future episode, please send us an email to davidandpaul@theibcguys.com.
And subscribe and leave us a review if you're on Apple. Follow and leave us a 5-star review if you're on Spotify. And please share this with your friends. We'll see you next week.